Hey, this is Sasha, the options coach. In today's video, we're going to take a look at 3 ways to trade earnings. A lot of people struggle trading earnings. It is a little bit more of an advanced topic, and you have to be more open-minded to thinking about how to trade earnings. So if you're only thinking one level deep, it's going to be more difficult, but I'm going to show you some of the techniques and things that we use when it comes to things that I work with, people that I mentor, coach. You can definitely check out the website for a little more information if you're interested in that. Anyway, starting out, this question was asked. So I'm going over some past earnings on a few companies that are reporting earnings this week. Looking at the history, it seems like a crapshoot. Even with good earnings, they drop, and sometimes they go up. Bad earnings, they go up. So can someone explain how you can play earnings when there's really no technical way to see which way it could go? So you are correct. Julie here asks, because in some cases you get into the stock and the earnings report is good, but the stock drops, or sometimes the earnings report is good and the stock pops, or other times the earnings are bad but the stock pops. So it just moves all around. It's like a crapshoot, and you are correct. It is a crapshoot when it comes to earnings because people are digesting words. I always like to say, if I say, hey, here's the color red, and there's a bunch of reds out there, different shades of it, which one are you going to pick? So when it comes to earnings, what I often see is a lot of traders are looking for a single linear event. And what happens here is you are trying to overanalyze these things. And I've even had guys that I knew that were on the board seat that knew the earnings beforehand. And even they said, oh, we're going to, I kind of like in a way where they said, there's times where I thought the stock would pop because of the earnings report. They were privileged to that information. Obviously they couldn't do anything. And then they say, well, it went completely the opposite. So my point being here is that earnings, they are a crapshoot. But when we look at doing earnings or winning on earnings in trades, we have to think of it in terms of series or events. So the way that you win when it comes to earnings trading is really, when it comes down to it, is to look at the number of events or a series of events. So I'll give you a basic example when it comes to, let's just say, a buy and hold position. So we'll just talk about a buy and hold position. And here we'll talk about in terms of quarters. So this is our quarter, and we'll go with quarter 1, 2, 3, and fourth quarter. Okay. Now the other thing up above here is we'll talk about like year number 1, year number 2, 3, 4, 5, and so on. So here we have kind of our a little diagram, kind of pretty simple and basic. And what we're really doing is playing through earnings. And let's say this company was Microsoft. Okay, it doesn't matter which company it is, but I'm just trying to get you into the habit of understanding the way earnings trades kind of work out and play. So during year 1, what might happen is, let's just say you're buying and holding about 100 shares of stock or something along those lines. And so you're actually looking for the stock price to head higher. Now, in some cases, you might say, okay, I won. But year 1, third quarter, you might have lost. Then you win again. Then year 2, you kind of lost, won, lost. You're like, oh man, year 2 was terrible. Then year 3, you're like win, loss. Year 4, it could be win, loss, win. And then you've got a loss, 2 wins again. And then you've got another few wins, loss, and a win. So the way that you look at earnings is we're actually looking at it over a course of multiple years and multiple quarters. This is how you do it in terms of, you have to think of it in terms of a series or a number of occurrences or kind of like a group event. And if you're buying and holding, you're looking at it in terms of, well, over the course of, let's say, 20 or 30 earnings, am I going to be a winner? So you might say, well, now this changes the game a bit, and it sure does. When we start looking at earnings, it definitely changes the game. Now, I'm not saying you have to hold a stock for 5 or 6 years in order to be profitable in terms of earnings. There are other ways to do it. So when we look at in terms of, let's just talk about strategy. There's a handful of different strategies that you could do when it comes to earnings. One of them, a very popular one, is kind of an iron condor, which takes into account like a IV crush and that kind of thing. So you do short duration. Another one also very popular is kind of a out of the money butterfly. So you could do that, meaning like you position a butterfly somewhere around like the call it the different expected move. So if this is the stock price looking for an up or down move. A third idea could be as well as just a at the money or just a slightly out of the money vertical trade. So I'll show you a few of these examples, but this is what you do. And the same thing here. Let's just take, for example, one of the more popular ones, like an iron condor. What I want to show you is that when you do an iron condor, and the way that it makes money, if you're unfamiliar with an iron condor, so an iron condor on earnings is that you're trying to really position that stock price. So here's the stock price for that stock to be kind of somewhere in between these price ranges. So let's say the stock's between $80 to $100 and the current price is 90. You're trying to get it to like move either down or up just a little bit, and it's trying to stay in that range. So our main objective in this position, really, as far as our curvature goes, terrible curve. So let's switch this to this green, maybe. There we go. So we've got a little curvature, and we're trying to kind of keep it in this zone in that iron condor. By keeping it in this zone, what's going to happen is after the earnings report, that's going to shoot up, and we're going to profit from it. Now, if it goes outside of it, we might lose. Now, let's say for conversation's sake, we're risking like $600 to maybe make $100. In other cases, it could be like 800 to make 100. But in a lot of ways, you'll probably be somewhere in that range. It just depends the type of iron condor you set up. So when we do iron condors, you're kind of looking at the similar concept as far as wins and losses go. But let's pretend this is a little bit different, not necessarily now quarters or years, because what you're doing is you're thinking in terms of earnings. But if you're trading earnings, you're trading earnings through multiple earnings. So what I'm saying here is that when we look at earnings, this could be like week 1, week 2, week 3, week 4. And what we have here is just different stocks. At the beginning, it could be, let's say, let me zoom in on this. So you could have something like Netflix for one earnings. You could have AMD for another week, and let's say Tesla for another week. Then you have Microsoft, the banks. Usually the banks are first anyway, actually. JP Morgan, and then you got like Apple, maybe an Amazon, and so forth. So it continues. But what you're really aiming for is that in some cases you are winning. Let's say on Netflix you won like $80. AMD, we went ahead and let's draw this down. We lost like 120. Tesla, we lost like 90. Then back to Microsoft. Let's say we won earnings of like, I don't know, about $100. So it depends on the iron condor and the position size that you're doing. Maybe Bank of America, you won like 60. JP Morgan, maybe you won 30. Because again, with an iron condor, you have a higher chance of kind of winning the probabilities. But it doesn't mean you'll win always the full or max amount. Apple, maybe you're down like maybe $30. Like sometimes you'll have some of those where you're not winning much, maybe like you're winning $20 because it kind of went outside your range, but it's still kind of in that range. But at the end of all of it, you're aiming for it to do enough to where that series, series and the number of occurrences actually are a winner. And that's really the way you think about earnings and playing earnings. As far as a construction goes, just to show you this example, let's say Tesla's got earnings coming up. It is the 23rd. So if you're setting up an iron condor for this base example, it could be something along the lines of, well, let's go with 44 strikes. That should be kind of enough for our purposes. So we'll set one up maybe here, and then we'll do another one somewhere maybe around here. And I think I did a 5-point wide, maybe here. Okay, messed that one up. Okay, let's try that again. Here, 5-point wide, and then we will do 275 and a 280. And then we can analyze this trade and this construction. You can see we've got some range or movement possibility in the stock, but I never know which way it's going to go. This one is based on implied volatility crush, so it functions and behaves a little different. Some of the other stocks are based on movement, so they're all a bit different. And the strategy is not necessarily important. What's important is that you have a strategy that can sustain something over the course of multiple occurrences and number of earnings, because that's what you're looking for. Is you're looking for earnings that actually beat out or play out well over time. So that's really the goal and objective, is to switch that mindset to thinking a little bit more different about it. So this one's an iron condor. You could just choose a direction, and let's say I'm choosing an upside here. So we'll kind of buy this one, maybe sell that one. And we can analyze the trade. So this could be more of like a directional bet, risking 200 to maybe make 300. So if it pops and moves, you could do it that way. And then you could do a similar thing with maybe a butterfly that's expected moves about 23. So this is 240. So I don't know, about 265, give or take. You could do a butterfly trade as well on a short duration. Again, there's other strategies. These are probably the more traditional ones when it comes to earnings trades, but obviously there's other things you could do. So here could be a butterfly trade risking $44 to have it maybe pop a little bit. And obviously this is kind of, you're not going to make the full amount, but you're just trying to get it to move somewhere in that zone or range. Anyways, so that's kind of my take in terms of earnings. The biggest issue I see people having is they don't think in terms of series or events. That's kind of the thing when it comes to this question, is that if you try to overanalyze it, there's just no point. You're just wasting your time, because you really don't know. And even then, in some cases, when you do have earnings, let's just say Morgan Stanley came out this week, and we had these earnings kind of over here. And if you were bullish, well, it kind of ran up. And if you were bearish and it didn't hit far enough, well, it went up and then it pulled back down, and you would have been just fine. So if you have enough time in the trade, sometimes they can work out if you can be patient enough. I know that's not always perfect, but it can work out. Anyway, my point being here is just look at sequences, number of occurrences. That's usually kind of the bigger issue for people as far as earnings go. Anyways, I hope this helps as far as if you're thinking about earnings or trading earnings. It's not the way most people would think about it or trade it. But we have to start thinking in terms of number of occurrences and sequences and situations, because we have to do enough earnings trades to be able to play them properly and accordingly. But it's not the way most people think. Anyways, if you're interested in learning more, deep dive and actually really having a solid education, just reach out, check out the website. There's a lot of mentoring and coaching I do with, 6-figure, 7-figure, 8-figure clients. So depending on what you're trying to learn, reach out. There's a lot of great things that we do with when it comes to hyper-personal one-on-one situations, along with group classes as well. Anyways, thanks for joining me, and I will see you in the next video. Take care.